Martin here from Secret, the channel for learning about trading and investing, and welcome to a brand new episode of Markets Tomorrow, where we analyze on the charts and look at what happened in the markets today and then how we can plan for a better trade tomorrow. And this is for September 29, Wednesday 2021. So friends, if you are not subscribed, please subscribe and share with your friends. It doesn't cost you anything and benefits others, and it means a lot for us too. So let's get into analyzing the charts and yes, buying the dips. That's what happened today. So as we do every day, we will be looking at the pre-market analysis for September 2021 based on all of these parameters that is here on the left of the charts, and then we additionally do several other analysis and then wrap up with some actionables. So we would have slides, next slides upcoming slides will be having the charts, don't worry. So let's see what the price action said today. It is a hammer on the Nifty, a hammer that bounced from the support, a hammer that dipped 2%, right? 3 days of bearish action ended up with a hammer bounce from the support. BANKNIFTY also had a hammer, but it made a silent all-time high in the morning. Remember that, right? But it could not sustain in the morning and dipped and then reversed back, right? So Nifty took the support of the previous resistance and could have a change in polarity because that support was the previous resistance, right? Let's see the charts. This is the left side Nifty hammer, the right side BANKNIFTY hammer. Support, change in polarity can happen if it's a bounce from here upwards. This kind of support from the previous resistance area, change in polarity bounce can happen if it's working out. So that is exactly what happened. Intraday, this is what happened. Market dipped, V-shaped recovery, right? So it's like around more than 300 points dipped and then 200 points recovered, 100 points still left. That's a red. And the BANKNIFTY also really similar, big fall of nearly 1000 points in the recovered 630 of that points. That's what happened intraday, right? V-shape, perfect, big V-shape moves, right? Buying on dips, hammer. Support and resistances are shown here. So the next nearest support is 70. Resistance is going to be clearing the 79.50. After that, you have 18,000, which is all-time high, which is like rounding, which is actually a rounding number, psychological rounding number. So the support that you can see is, you can see where it bounced back here. This is a support region of 17,575, 17,650, that range. And then if that is given up, then you have 17,350, 40, that range. If that is given up, this is 17,250 kind of range, and then if that is also given up, we have 17,000 to 7150 range, right? So our previous retracement levels, but the last one, the 7,000 is a Fibonacci retracement level, and the swing lows are there all otherwise upwards. If 18,000 is taken, we have 18,250, which is the Fibonacci projection. On the right side, we have BANKNIFTY, which is also taking a bounce, and this is taking a support, the previous support region, which is a 37,900, 38,100, and if that is the next resistance supports, Fibonacci extension is 38,200 range, and downside. So today it made an all-time high, BANKNIFTY, and downside the support 37,700 is a previous resistance. So that when it's support, the bounce might have happened from there, and means right, it's still closed above it, and so down it's 36,900, 37,200, and then that's problem 36,300 to 36,500. So it's important resistances. Momentum divergence, we can see the Nifty and the BANKNIFTY both have momentum bullishness that is intact. It's about 60. Here also 60 does not split sideways. But another thing is it has got a bullish reverse divergence on Nifty and BANKNIFTY. So there is a chance that it can bounce up tomorrow. There is a chance that this is a change in polarity region. This is a change in polarity region where previous support, previous resistance acts as support, previous resistance acts as support. So this is a change in polarity bounce that can happen. It's not confirmed, Also, there is a momentum reverse divergence that can happen if it moves over the previous candle. So that is also a possibility. If that is happening, then it can go back to the all-time high in Nifty and Nifty both. So it's a good support zone, but it can bounce on this summary. It's not necessarily that it bounce. It can, maybe it can dip down also, but there is a probability that it can bounce as per the chart patterns and the divergence, indicator divergence. Trend indicators is showing there the ADX, DMI, it's in the bullish zones, DMI in the bullish zones is right, Bank Nifty on left Nifty. Now the trend strength of ADX green part is dipped, then the strength is reduced, right? So, and also it's seen as not rising, so trend is reduced, no, obviously, but it's still in the bull zones. Momentum intact, no, but it does reduce and it is forming the reverse divergence which can move it up. So that's about momentum and divergence. Now volatility, look at this. Now last 3 months, 60%, near to 59, near to 60% of up move in the VIX is happening. Market moved 12%. Now 2,000 points of movement happened just when the big short term, after short term. So it's a fear as the market is rising up towards 17, 16, 17, 18. The fear and the greed index is also rising, right? So somewhere it can cool off and start, it's mean reverting nature. So right now it's 18.5. The VIX today again moved to 3%, right? And IB implied volatility is 70.6. ABP is 40%, it's catching up. So it is buying about 70, 75. It's going to be good premiums and good potential for a VIX crash or a volatility crash that can happen and they can benefit, right? So that's about volatility. The new forming a new range, the above 15 range. Now open interest data, if you see, you can see that the Nifty has the highest put writing that is happening at 17,000, and then after that you have 70,500. The highest resistance is call writing is seen at 18,000 and then very close by 7,900. Put call ratio is not very good, 0.77, and it's a short bit that happened with futures. Bank Nifty 37,000 is where the highest put writing is there, and 36,000 is after that. So 37 is going to be good support for Nifty for the expiry if nothing happened in the next 2 days. So open interest resistance for the Bank Nifty is 39,000 and 38,000 both, right? So it's a short bid up and its PCR ratio is 0.83, is not bearish but not bullish enough, you can say, but yeah. So so that's open interest analysis, right? The levels, keep these levels in mind and keep the VIX levels in mind and keep the support resistance levels in mind and plan your trades, and then that's the way to go. Now the sectors, how did it perform? Index, the IT index, which is shooting up vertically, corrected more than 7.5% in the last just 3 days, right? There is a bearish momentum divergence on the daily, and that's what brought it down, right? Today also 2%, more than 2% of dip happened in the IT index, and so the dollar is shooting up. It is not something that you have to keep on. As long as the dollar is given, IT is going to benefit, right? So it may not be permanent dip. It's maybe only a retracement, and it can bounce back, right? So keep there is a momentum reverse levels also forming in the IT index, if you see. So as long as 16 momentum RSI is held, it's fine, right? So watch for that, and if it is holding that tomorrow also and showing some change in polarity and momentum kind of bounce that is happening, means that's the time to re-enter all those dipped IT stocks like Wipro, Infi, all of those that have corrected this 7.5% last few days, right? So it may not be permanent. Metal, small body indices can again momentum sideways, ignore. Auto sector 0.5, but 0.5% dipped, right? That's still bullish. There can be a little breakout. Watch out for the breakout, and then after that you trade this in the watch list. Pharma, stay away because sideways momentum. Slightly attempted to move up today, but FMCG gave up 33% again. Some correction is happening there, but it's bullish on, right? 5 days, 3% lost. So make sure that the momentum is not going wrong into the sideways zone. So as long as that is done there, watch out for the bounce from that zone and then pick up the stocks in the watch list and trade, right? So FMCG and IT both, some correction is happening, but still in the bullish zones. Others are all sideways, and reality is also good, right? Three sectors: FMCG, reality, and IT. But reality obviously gave up 3% today, and that's obviously not a point because 30% of move happened just in 5 days, so it has to give some of it. It's a cup and hand breakout, and then it has miles and miles to go, right? The institutional participation data has not come in. I'll just quickly check if it has come or not. No, as of now it has not come. Let's continue with other analysis. The dollar index and US dollar in our currency pair, you can see that it is shot up, V-shaped recovery bounced from the channel edge, and now it has hit resistance zone. So rupee has weakened and dollar is strengthening to currency pair. And dollar index, which may not be directly correlated with the USD INR pair, but dollar index is breaking out from a very strong resistance zone, right? So if this is the last time when this happened, when it was shooting up like this was in June to August, 3 months, and that is when market consolidated throughout that period, right? So we don't know what will happen here today. So look at the oil. The oil is also shooting up, it's a resistance zone, but it is 76.70, the 3-year high levels, and the US and the gold is not performing even when this markets are, when the dollar is rising, the gold is obviously when the dollar is increasing, the gold prices will go down. That's what is happening. So from it slipped from the previous resistance zones up here, and then it slipped, and as of now the US markets, all of them seems to be showing red, right? So there's some major bearishness that is seen in the US markets, and we'll have to cross check that for the next day tomorrow if this is something to do with anything, and accordingly take the decision to trade. Now the actionables remain the same as Godrej Properties has done. It is doing some kind of flag formation here, so it is blocked out of a channel, and there is a potential as long as the reality sector is moving. It can retrace or it can break out either side, but most likely it is going to further break out upwards. So we'll wait for the right moment for the breakout and then enter, right? And have a tight stop loss at the FIB support levels, nothing below this Fibonacci retracement levels, right? It is consolidating for further breakout is what it looks like, right? Momentum is also very bullish there. So right side NDPC momentum has caught up. There is something happening in the power section, and then you can see that there's a nice channel up move that is happening. So if there is a retracement that you get here, it may be a good swing trade for the NTPC. So just to wrap up, my vertical view on this is cautiously, mildly bullish, right? Cautiously bullish was yesterday, now cautiously, mildly bullish. That's all. So market had not made any arrangements. Suddenly Fyers also selling today. Yesterday also they are selling. So there's a size selling happening. Dollar index is catching up. US market down, yield up, crude high, right? Rupee depreciating, and VIX shooting up at 36, more than 30% in 10 days. And the only thing is momentum and trend indicators are not showing anything, right? And candlestick also is showing a support bounce hammer. That's bullish, right? That's why it's still bullish. But volatility is something that has drastically changed. The market shoots up, the volatility also is shooting up. So there can be some cool off that can happen. Premiums are good. Option sellers can make the right swing entries and then make money. Buyers are finding it really difficult unless they know how to read the chart reversals and the price actions, right? Because the market moves up steadily and then immediately moves down. So if you know how to flip at the right moment, you can make a lot of money. Now the ratio spreads on IM/FI continues to be started at higher VIX levels. It may not move further high. The VIX may cool off for some time because big moves are happening in the VIX. So there could be a cool off that can happen. So yeah, so that's why the ratio spread IM/FIs may work out, right? So that's the wrap up of what happened in the market, and I hope this helps to form a view of your own, and you can form your own trade plan, your own risk appetite, and then do great. Thanks for watching, and please subscribe and share if you're not done. And happy trading and happy trading. Bye.